Hi, everybody. I'm Shahid. Today, our topic is employment income and savings income and dividend income. This is a must question for your exam. We will go through different examples with you and see how you can solve this question in your AAT exam. And my focus will be to make your concepts crystal clear through these examples. So let's start. So example number one is Mr. Smith has been working for many years and received a salary of 62,500 per annum for 2022-23, and there is a PAYE deduction. So PAYE is pay as you earn from his pay slips from his salary. 12,000 pound was deducted. He has no other source of taxable income. So this is the performa. I made it here in Excel. So this performa we have to follow. So in the exam, you have to follow in the same way. It will be easy for you to handle this type of question. So first thing is employment income. Employment income always come under non-saving income. So 62,500 pound. Yeah. And then there is a personal allowance available, that is 12,570 for 2022-23. So when we will minus this one from there, so taxable income is 49,930. So Mr. Smith actually is a higher rate earner. So the reason is because his salary is more than 37,700 after deducting personal loans. So he falls in high rate band. So first 37,700, we need to apply 20% tax. So 20% of 37,700 is 7,540, and 49,930 minus 37,700 is equal to 12,230. We need to apply a 40% rate because he is a high earner. So this tax he needs to pay is 12,432. Because he already paid 12,000 pound through his pay slips, yeah. So it means we need to minus this 12,000. So actual tax he needs to pay is 432. Let's see another example now. Billy had a trading profit of 27,500. Remember, Billy is here, is a self-employed now. She is not an employed. She's a self-employed and she has a 10,000 pound interest from bank. So we will fill these columns here, trading income and savings income. And we need to minus the personal allowance for a year, and the total taxable income is 24,930. So Billy is a basic rate, yeah, taxpayer, because her total taxable income is less than 37,700. So 14,930, we will apply 20% tax. So the total tax payable is 2,986. No, because she is a basic rate taxpayer, so saving allowance available for basic rate taxpayer is 1,000 pound, and for high rate earner is 500, and for additional rate taxpayer holders it's nothing, because she is a basic rate taxpayer. So 1,000 pound at 0% is 0%, so there is nothing she needs to pay. And from 10,000 minus 1,000, 9,000 has been left. So she has to pay a 20% tax on this one. So the total she has to pay 1,800 pound for her saving and 2,986 from her non-saving income. So when we will add these two figures, 2,986 plus 1,800, so total tax payable is 4,786. Let's see another example, the same example, but this time recalculate Billy's income tax liability, assuming the bank deposit interest is 25,000. So only thing we need to change here is savings income to 25,000 pound. So now her taxable income is 39,930 pound after deducting personal allowance. So she is a high rate earner because her taxable income is more than 37,700. So this 14,930, we need to apply a 20% tax. And because she is a high rate earner, so 1,000 pound is not available as a saving allowance. So saving allowance available to her is 500 pound. So 500 at 0% is 0. And the remaining left is 37,700 minus 14,930 minus 500 is equal to 22,270. So the remaining no is 2,230 still left. Yeah. So 37,700 we have already used up to here. So 14,930 plus 500 plus 22,270. So the remaining has been left is 2,230. For this amount will come under additional high rate 40% we need to pay because 25,000 is the savings. So 500 plus 22,270. So 25,000 minus 500 minus 22,270 is equal to 2230. So this amount 892. So we need to add this figure from non-saving and from saving. The total need to pay is 8832. Yeah. Let's see another example now. Molly receives bank interest of 22,500 and no other income. It is very interesting. There is no non-savings income. There is an only savings income of 22,500. So remember, if there is no non-savings income, we need to minus this personal allowance from savings income. So her taxable income is no 9,930. Non-saving income is nothing, so we will straightway jump to the savings income. Remember, here the most important point here is there is a starting rate band for savings income. If the non-saving income is less than 5,000 pound, yeah, so there is a 0% band available. Yeah, so it's as Molly has no non-saving taxable income, the full 5,000 pound 0% starting rate band is available on the taxing of the savings income. So 5,000 at 0% 0, and because she is a Molly is a basic rate, so 1,000 at 0% is 0, and then 20% tax we have to apply on 3930. So from where this 3930 comes, 9930 minus 5,000 minus 1,000 is equal to 3930. So the total tax needs to pay is 786. Let's see one more example to make your concept clear. So if you see here now, employment. So here Polly has a trading profit of 13,500. Yeah. And the bank interest rate is 18,000 pound. So after deducting the personal allowance, total income is 18,930 taxable income. Again, it's a basic rate taxpayer. The reason is Poli's total taxable income is less than 37,700. That is a basic rate band. So it is a basic rate taxpayer. So the thing here is no, the very interesting thing here is non-saving income is less than 5,000 pound. So if the non-saving income is less than 5,000 pound, so it means 5,000 savings band, the starting rate band is available for up to 5,000 pound. So this 930 we need to tax at 20%, and when we will come here on this 18,000 pound, So this time now, £5,000, that is our starting rate band, minus this 930. So 4,070 left. So this 4,070, we need to apply the 0% because it is a remaining starting rate band. This is an important question. This question can come into your 8 exam like this one. So you need to remember. Because Poly is a basic rate taxpayer, so there is a £1,000 of allowance at 0% is available. And remember, if Poly was a additional high rate earner, then there was a 500, and if it is additional, there is nothing available. And now 18,000, yeah, because there is a total is 18,000, so 12,000 plus 1,000 plus 4,070, we got our total savings income. Yeah. So the total tax payable here is 2,400. Yeah. So if we see if we add this 186 plus 2,400, the total is 2,586 need to pay. Poly has a non-saving taxable income of 930. As a result, has a 0% starting rate band available for her saving income of 4,070. As Poly is a basic rate taxpayer, her savings income rate nil rate band is £1,000. Yeah. Let's see one more example and we will finish. Mike received gross employment income of 108,000. £32,000 was deducted at source at PAYE. Important thing. If the employment income is more than, if the income taxable income is more than 108,000, so we need to adjust this personal allowance. Yeah. So the personal allowance is reduced by half for every £2 after 100,000 pounds. So first we need to adjust the personal allowance in this example. So personal allowance available for 2022-23 is 12,570. Because income is above 100,000, so 108,000 minus 100,000 is equal to 4,000 is equal to 8,000, and then we need to divide it by 2 and we will get 4,000 pounds. So the adjusted personal allowance is now 12,570 minus 4,000 is equal to 8,570. So here we will write here 8,570. So the non-saving income is now 99430 and the total taxable income is 99430. Only Mike is a higher earner because his salary is greater than 37,700 and less than 150,000. So basic rate band, we will apply 37,700 at 20%. This is the tax 7,540, and high rate band is 61730. So it is equal to from 99430 minus 37,700, we got 61,730 at 40%. So the total tax payable is 32,232. Because Mike paid 32,000 pounds through PAYE, we need to deduct this 32,000 pounds. So actual Mike need to pay is 232 pounds. Thank you very much.